you don't really know
Yeah.
the potential risk or how bad it is or how hard it is. There's things that I've done that down the road, I look back and I'm like, man, if I were to do that again, I probably wouldn't do it knowing how hard it was. But when you go into it naive, you just keep trucking along.
What are some of the best side hustles that somebody can do right now to start generating some extra cash on the side?
Well, you know, a lot of people are taking this couch flipping thing by storm. And
You're like the couch flipping king.
you know, it wasn't a title that I thought I was going to have, but that's what they've labeled me.
Wow. So how is it? Because you went from going 0 to like $8,000 a month or something in couch flipping as a side hustle.
As a side hustle, dude. You know, it was funny. I just got married. My wife and I were broke. We didn't have a lot of money. We got married young. She just turned 21. I was 24. And I'm sitting there looking at my apartment we just furnished, and I furnished it all with used furniture. And I'm like, dude, I've just bought a bed, a couch, a table, everything for less than $1,000. And I'm like, I bet you I could sell all this for way more than what I paid. And so I said, I'm just going to like take a shot. So I bought a couch, threw it in my living room apartment that just didn't even have space. But I was like, babe, I'm just going to try something. Just bear with me. You know, ended up selling that couch and making a profit. I was like, dang, like this is a real thing.
What did you buy it for and what did you sell it for? Do you remember?
You know, that first couch wasn't a ton. It was like a test, just 3, seater type couch. And I think I bought it for like $20 and sold it for like 150. Wow. And I was like, wow, this is crazy. And then eventually it just started to be like, oh, I realized sectionals pay the best. I realized that if you had the couch and love seat, people would pay a lot more versus just like a standard, just small couch. That's like the worst couch you can buy.
Wow. So like, how did you do that though? So like how does somebody flip couches and make money?
Well, the way I did it back then was I bought a truck. I paid $1,500 on Craigslist, and I actually got scammed on that truck. He told me it had 99,000 miles on it, and I looked at the odometer, and it looked like it did, but after I drove it, I looked and I saw there was like an extra number that was hidden.
Oh my God.
Yeah, and so I looked, and then I saw there was a 1, and I go, this thing's got 199,000.
Oh my God.
But nonetheless, it served its purpose. I was picking up couches in that truck, and I was originally storing them in our apartment. Well, after I bought a couple, we were done. And so she was like, hey, if you're going to keep doing this, you need to go figure out where you're going to store this stuff. So I went in, rented a storage unit at the closest storage place.
How much did that cost you?
It was probably like $150 back then.
Wow.
And I got a month, and I got a 10 by 30. And so the good thing was, it's not like I was dragging couches around a storage unit. Like it was a pull up right there. The garage opens. You dump the couch in there and you're done. So I did that, and I just filled my first storage unit with a few couches.
Where did you buy them from?
Everything back then was from Craigslist, because back then there was no Facebook Marketplace. OfferUp was pretty new. Let Go and these places like were all coming on the scene.
So like how much so I'm trying to understand this. So you're flipping these couches. You go to Craigslist. How much are you trying to pay for a sectional or a love seat?
So what's funny is how I was doing it back then is totally different than how people are doing it today from what I've heard success-wise. Like there are people I know for a fact doing it and making $20,000 a month.
Wow.
It's crazy.
Flipping couches. And so the way I did it back then was I didn't want any free stuff, because to me I was like, that's junk, whatever. I want to buy a nice sectional that I can get for like $100 to $200 and sell it for $200 to $300 more than whatever I paid. Okay. That was my business model. And it worked great. I mean, I would just literally buy every sectional that showed up. Like I would be searching on Craigslist every hour, just sectional, to see if something new, came up on the feed. And then if it did, I'd make an offer. I'd be like, hey, I'll pick it up right now. And then it would just create urgency, and people would give me a great deal. So how many guys did you have to pick up the sofa?
It was just me.
You picked up you got some muscles on you. How you pick up the sofa by yourself? How do you do that?
It's kind of a little bait and switch. So you get there, right? And you've got your $100 for the couch. And then they're like, okay. And I'm like, hey, by the way, can you help me load it up? And I take that back. One time out of hundreds of couches, did somebody say, dude, I can't help you.
Okay.
Because somebody had like a back problem.
Yeah.
And that was one where I just willed it through. But other than that, dude, the person, whoever you're buying it from or whoever you're delivering it to, is really receptive to helping you unload it.
Wow. So you go buy these sofas, couches for $100 a piece, and you try to make $200 to $300 additional, and you were able to scale that up to $8,000 a month.
Yep. So by then, at that level,
it didn't happen right away because I did not know like what I had, right? There was no YouTubes talking about it, that this was this cool thing that could make you money. I was just figuring it out. And it wasn't just couches back then either. I was buying everything. I was buying couches, buying tables, chairs, appliances. Dude, I can't tell you how many washers and dryers I hooked up back then.
Really?
I was an appliance dude as well. But after doing everything for probably a year, I've realized, like, I looked at my business and I said, couches make the most money. They have the least amount of headache. They sell the quickest. You know, all this other stuff, like I'd have to go pick a washer back up because it broke a month later.
Oh my God.
And I'm like, yeah, I mean, I feel bad. Like, I'm going to refund you. But, you know, so point is, couches just kind of became apparent to me that this is the best thing to sell, like, you know, for this niche.
So out of tables, chairs, appliances, couches are where the big money is.
Well, I think the big money was there, but also too, I think you're able to do it by yourself. You know, the washers and dryers and fridges.
Oh yeah.
They're hard to do by yourself.
Yeah.
The tables were difficult because they get scratched easy. You know, like if I was trying to load a table up into my truck, man, that thing's going to get scratched up. But with the couch, the way that I load it, like you guys can look at my YouTube channel. I actually loaded one by myself to show people like, yo, it's possible. It's not that hard.
How did you do that?
So basically you take the couch and you put like the two legs on top of the, you know, whatever, the tailgate.
Okay.
And then you go walk around to the other side of the couch, pick it up, and just slide it in. It's like, it's not that hard.
You ever see that Friends episode? It's like pivot, pivot, pivot.
Yeah.
You need two people to do that, but that's crazy. So you started flipping couches.
Yeah.
You made good money doing that.
Yep.
Then you started flipping houses right after that?
Yeah, so I think, what was it, 2013, I got married and I started flipping couches soon after. Did that for about a year. And I remember at our 1-year anniversary, my wife and I were in New Orleans. And I was like, man, like, I'm super grateful that we're making money and I've got this thing I figured out. But am I going to really do this the rest of my life? Like, even if I did, I would have still kind of been okay with it because I had freedom.
You're making almost $100,000 a year.
Yeah, I was making good money, more than I'd ever made in my life. And I'm like, but do I want to be the couch flipper the rest of my life? And so I remember I just was praying on our 1-year trip and I said, God, what do you want me to do with my life? And I ended up seeing on TV one of those commercials like, hey, invest in real estate, no money, yada, yada, yada. And I go, scam. It's a scam. And I just felt something in me calling me to look more into it. And so I looked into it and I started Googling. I'm like, how do you invest in real estate with no money? And I learned about all these things like wholesaling. I learned about hard money loans. I learned about private money. And I go, holy crap, like I don't need my money to buy real estate. Like there are a lot of ways to get money to do a deal. And so I went back from that anniversary trip and I said, I am going to find a deal and I'm going to flip a house. And that's what I did. A couple of months later, I bought my first flip. We sold it in almost a little over 2 months and I made $25,000.
Wow. So how much did you buy that one for?
So it's funny. I bought 2 houses right off the bat because to back up a little bit, I'd saved up about $10,000 from flipping couches, which for a lot of people who ask me about my story, they're like, well, how'd you only save up $10,000? Well, you got to remember, I was also playing pro baseball at the time. And so I was couch flipping 6 months out of the year. It's not like it was a full-time deal.
Wow.
So I worked 6 months flipping couches, make good money, go play baseball for 6 months, make no money. And, so I was living off of, call it $40,000 a year, right? Something. So anyways, I saved up $10,000 and I knew that for me to flip a house, I needed more. And so I said, you know what? The quickest way to do this is to just max out my credit cards to get a down payment.
Wow.
So I maxed out both my wife and I's credit cards.
Really? Your wife let you do that?
She let me do it because she saw the success of the couch flipping and, obviously like she trusts me. Thankfully, shout out to my wife.
Yeah, shout out to your wife.
Shout out to my wife. But I maxed out both of our credit cards and got $50,000. And so I said, hey, with this money, I can use it as a down payment for a hard money loan and I'm going to go buy a flip. So I ended up finding a deal on Craigslist, ironically, because I was always looking for couches and on Craigslist, and I was still couch flipping at the time.
Yeah.
So I find this deal. It was $135,000, and I talked to the wholesaler. There was a wholesaler selling me it, and I went in and looked at the property, and I said, "All right, I'll buy it." So ended up buying that house. It took about $30,000 of the $50,000 that I got. Then a couple of weeks later, I found another house. And this one was on the MLS. and they were asking, I think, $115,000.
The MLS is where the realtors find their properties.
Yep, just normal property on the market. And they had it listed at $115,000, and it was in really good shape. And I looked at the comps, and I'm like, I think this thing's probably worth like 130, 135. And I just made an offer. I said, I'll give you, it was like 90,000 for it.
Wow.
And they said, no, but we'll take, I think at the time, 99,000. And I go, okay, that's a good deal. Like, I'll buy it for 99. It doesn't need work.
Yeah.
And so I ended up getting it for 99, I think, but I also got a commission on it because I was a realtor too.
Wow. Okay.
So I
you got another $3,000.
Yeah, I got it for like 96, and I ended up going into that house and I put $2,000 just like in just random things just to get it cleaned up a little bit. The other house that I bought had a tenant, so I hadn't even got the tenant out of it yet, and you know that house was still just like waiting to get worked on. So the second house ended up selling first, and that was what made me $25,000. And I said, wow, this is crazy. Like, I can't believe I made $25,000 that quick, that easily, you know, and I could just do this over and over again. Like, it's not rocket science. And so, you know, I'd sold that one. The other one I originally bought, I sold it a few months later, made $15,000. And man, I was off to the races.
So can you tell me, like, what is it like to max out your credit cards? What does that mean? Like, how did you actually go out and just pull out $50,000 from your credit cards?
Yeah.
And how did you feel when you did that? Were you scared? Were you like anxious?
Yeah. People ask me this a lot. And for me, we kind of talked about it on the podcast you and I just did, where I was young and I was like, dude, I don't have a lot of money right now. Like, what do I have to lose by taking a chance?
Yeah.
And to me, the upside was so great that if I was right and this did work, it's going to be well worth it. And if I was wrong and it didn't work, maybe I break even on the flip. Maybe I lose a little bit of money. But either way, it's not like I'm going to go lose $50,000. Like, I'll pay it back. And in the very worst case, what happens? Like, I declare bankruptcy or something.
Yeah.
Like, to me, none of those downsides were really that big compared to the potential upside. And so to say I wasn't scared wouldn't be true. Like, I mean, anytime you go into something you've never done, you're like, man, I hope this works.
Yeah.
And you have some uncertainty, but I wouldn't say like I had fear. It was more just like, man, we're really doing this. Like, I hope it works.
I think that's part of like being an entrepreneur is, especially when you're starting off, you have to be willing to see the upside and you kind of ignore the risks, because a lot of people who, especially even if you're trying to start a side hustle, if you start to just see only the risks, you don't see the upside, you're never going to want to
You never take action. You know, and sometimes I tell people this, it is better to be like naive, because when you go into something and you don't really know the potential risk or how bad it is or how hard it is, there's things that I've done that down the road, I look back and I'm like, man, if I were to do that again, I probably wouldn't do it knowing how hard it was. But when you go into it naive, you just keep trucking along until you figure it out and eventually it gets done. And so for me, as I maxed out those cards, I just was kind of ignoring all the warning of just like,
go for it all.
Just go for it and it's going to work. Just like super optimistic.
And you were working hard.
Yeah.
So you're like, you started off with these side hustles, and these side hustles became big businesses. Now you have something like 11 different side hustles, businesses that are making you $75,000 a week.
Yeah.
Can you talk to me about that? What are these 11? How are you making so much money with these side hustles, now businesses, and how do you manage all that?
Well, you know what's funny, man, is that video, I want to say it's probably like 8 months old now. So like it's gone up significantly since then,
really?
As just these companies have grown and my following has grown. And I mean, like, we've had months where we've made over $1 million net.
Wow.
And I'm just like, this is unbelievable. Even as a guy who had business success, to see like it actually happen, I'm just like, wow, like, I can't believe it.
What's funny is it started by flipping couches.
It all started because I took a risk flipping couches. You're absolutely right.
And you kept going. So now what are these new things that you're doing?
Man, so on that video, I counted a lot of like my rental income and just like random things. But like I like to tell people, I have 6 core businesses, and those are where I'm making, 95% of my income. So, I still have my house flipping business. That's what's, really made my money and helped me become a millionaire. We do over 100 deals a year between flips and wholesales.
Wow.
So that's always been the bread and butter the last 7 years. Second business that I started was my real estate brokerage. So, I mean, you're here in my office now. We've got over 150 realtors. So they're just out there doing their thing. I'm just pretty passive on it. I'm a business owner. So that business has been great. The third business I started was Future Flipper, which is an education company. And I just started, like you, man, I just was like, man, people keep asking me, how do you flip houses? How did you make this money? And how can I do it? And so eventually I was like, you know what? I'll just make a course and write a book about it. And that's all I did for a long time. But then eventually it became, well, we want coaching, we want events, we want, all these things. And so that developed into a full-fledged company that now we've got thousands of students. And I'm just like, did not predict it. Like I think one of these things for all the businesses is like, I did not predict these things would grow as fast as they did, nor was I like thinking, oh, I'm going to build this huge house flipping business. We're going to always do hundreds of flips and, I'm going to have thousands of students. Like that was never a goal. It was just like, there was always a small demand where people were like, hey, can you show me how to do this? And I go, you know what? I'll create a product for that.
Sure.
So that was how that started. Then I have my CPA company, True Books, which we've got hundreds of clients across the country.
Are you an accountant?
I am not. So I partnered up with my partner who is an accountant. So the way that started was, as I started to make a lot of money, I was like, dude, I got to figure out my tax. Like, what am I going to do here?
You're paying a lot of money in taxes too.
Yeah. Now. And so my current accountant, or my accountant at the time, I should say, just was not like understanding all the ways we could write off things. Cause I was doing my own research. I'm like, why can't we do this? Why? And they were like, no, you can't do that. And I'm like, dude, I need to find someone new. So I put it out on Instagram. I was like, hey, if anybody knows an accountant, like I'm looking for referrals. And this guy reaches out to me. His name is Matt. He's my partner now. But he goes, hey, I've been following you for a while. Like, give me a shot. And at the time, he was young, man. He was like 26, 27. And I was like, dude, you're not old enough. Like, you don't know.
You haven't seen all the ropes yet.
Yeah, like, I didn't trust him. I kind of dismissed him. And even though I was young, too.
Yeah.
I was probably 29.
You just expect to see an old dude that just knows everything about
I want somebody who knows every loophole there is. And, anyways, so he comes to the office, and I interview him. And I was like, man, this dude is a hustler. He's young. He, like, gets it. He wants to, like, grow. Mm-hmm. So I let him do my taxes. And I remember I made a few million that year and I did not pay like nearly what I thought I was going to pay. And I go, I like you. And, he ended up doing my taxes. And I had a lot of people ask me, just my friends and stuff. They're like, hey, what'd you end up paying this year? Like you had a good year.
Yeah.
And I told them and they were like,
well, what did you end up paying?
It was like less than $300,000.
Wow.
And
less than 10%.
Well, and I think that year, that was 2018. So 2018, I remember I made about $2 million house flipping. And, I had some other things going on.
And house flipping, you don't get the same long-term capital gains taxes as you do if you own it for longer than a year.
No, but during that year, I did a lot of things that helped offset my bill. Like I bought a car, I bought a bunch of rentals, I got all the depreciation. Towards the end of the year, I bought a lot of marketing in order to, preload it for 2019. I did a bunch of things that I knew I needed to do that my current accountant was not like telling me to do.
Yeah.
But long story short, I did not pay that much. And I was like, I like this guy. So a lot of people were asking me, they were like, hey dude, like how did you do it? And so I ended up going to Matt and I go, hey, I'm getting a ton of people who want like you to do it. I know you work for this other company, but how would you feel if we started our own company?
Really? So you just asked them to like quit and come work with you.
Yeah.
Build something new.
Yep. And so what was interesting about him too is most accountants are very risk averse.
Yeah.
Right. And he goes back to me. He's like, let's do it, dude. Like he has an entrepreneur mindset, which is very rare for a CPA. And we started our company True Books. And I think 2020 was like our first full year, just figuring things out. It was literally just him. And then 2021, now we have a staff of like 10 people. We have grown it tremendously. He's been on YouTube videos with me and like just giving value. And it's been a great thing, man. But for me, I just started it as like, man, people are going to ask me for tax help. Like if I can just give them a source that, I know I vetted and, I have some control over, then it's going to be great. So yeah, the tax business grew out that way. And so we were doing that. But then in 2020, that was when I started doing social media. So, started my YouTube channel in May of 2020. I started doing TikToks. I started like just taking content very seriously.
Yeah.
And during this time, my businesses started to explode from it because we were just generating so many leads, and I had already
From TikTok.
Dude, from everything, Instagram, TikTok, YouTube, everything.
Wow.
And because like my content is built around like what my businesses are. Like I talk about how to save money with taxes.
And then you say, you want to save money, use my company.
Yeah. And so it's not even like a sales pitch. It's just like, dude, I have the answer if you really want it.
Yeah.
And so I just was making content about all the things I was already doing with flipping houses and realtors and taxes and all this crap. So, I started making content and it starts to go really good. Like you mentioned, the couch flipping video blew up and had a few real estate videos do good. I talked about how this 10-unit apartment I owned, I bought for $16,000 down and, seller financing, no payments for 3 years. It was a crazy deal. But, they just started to grow and people were like, dude, I want to invest with you. How do I do it? And so that led to starting Pineda Capital, which is a fund. And so then we just bought a 334-unit apartment complex in Georgia, all from social media. Like literally we raised almost $6 million just from my following, and we bought this big building. Crazy,
Wow. So what was the cost of that building?
We paid a little over $20 million for the building.
You bought 300 some units for $20 million.
Yeah, it was about $60,000 a door, right around there. And then we plan to put, like $1 to $2 million into it. It's already in good shape. It's rented. And once it's stabilized and we get the rents we want, it's going to be worth over $30 million.
Really?
Yeah.
Are you going to sell it then and cash out, or are you going to continue just getting the cash every month?
Yeah, so our plan is with our investors to refinance in 2 to 3 years, get all of their capital out of the deal, and do a burr on it, just own it free and, well, not free and clear, but own it with no money into it of our investors or our own, and then just cash flow that thing, man.
That's awesome. So you started flipping couches, you
Yeah.
started flipping homes, and that led to business or side hustle after side hustle after side hustle after side hustle, which became business after business after business after business.
Yeah, and I mean, like the fund started that way, and then like the last business, which I'm really excited about, is our e-commerce business. So we started this company called Lunar Ecom, and that started out as a side hustle. So this guy goes up to me, he goes, hey, or he DMs me and he says, hey, your content has really helped me out, man, and I want to make you an Amazon store. And I go, dude, I don't really care. Like,
Yeah.
It doesn't matter. I've seen these Amazon automation things and, whatever. And he goes, but dude, like, I'll do it for free. Like, you have nothing to lose. Just try it out. And I go, all right, I'm always down to try new things. So I do it. And then the store starts making money. And I'm like, this is weird. Like, I'm not doing anything and it's making money.
What are you selling?
So it does, it's drop shipping. And so what we sell every month just changes every month. Like, it's just random crap. Like, we might sell this cup. We might sell,
Really?
a plate, paper towels, toilet paper. Like, it's just anything you can make a spread on. And so, like, when I look back at it, I'm like, man, I was selling frying pans. I was selling, like, just random stuff.
Wow.
So, like, the virtual assistants and everybody, like, they just do product research. They handle all the fulfillment, the refunds, all that stuff. And after a while, I just started documenting it on YouTube. I was like, hey, guys, here's what my Amazon store made. Like, it's pretty cool. And guess what happened? Everybody goes, who's your guy?
Yeah.
It's very similar to the tax, very similar to everything else I created. And eventually, after seeing it in person for months and after looking at his business and looking at other people who were in the industry, I was like, all right, I did not want to do this, nor did I plan to, but I'm going to get into the e-commerce business. And so, I launched Lunar Ecom, and just like the demand for it was insane. Like, we've got hundreds of clients now, and I barely promote it because, like, we've been swamped with so many leads and people that I didn't hire enough staff. Like, I didn't expect the amount of people that would want a store. And, for me, just like that business has the potential to be so big that I'm just trying to grow it slower than my other stuff of like hiring and making sure we get everything built out. But yeah, like between those 6 businesses, like those are what are making me 95% of my stuff. Like, the rentals and, other things are great. I had staked my crypto. We were talking about that on my podcast. That was making me a little bit of money. And, but at the end of the day, for me, nothing pays more than owning businesses.
Right. So now someone who's watching this, they're 25 to, let's say, 40 years old. They're working a job right now. What is something that they can do right now to start earning some more money? Because I think what a lot of people are saying is, holy crap, my job isn't paying me enough. Inflation is really ramping up. Things are getting expensive.
Right.
I need some extra cash. So
Yeah.
what do they do?
Well, it really depends. Like, one of my philosophies after going through this for a long time was like, you should develop one skill that can make you a lot of money. Like, that's what I always say. Like, so for me, that skill was flipping houses. That was the first time I ever started to make a good chunk of change.
Okay.
For a lot of friends I talk to, like, they become YouTubers, and that's how they make a lot of money. Like, that's great. If your skill is being a really good realtor and you're great at selling houses, fantastic. Get good at that. If it's e-com and you're a great drop shipper on your own, great. Do that. But I think everybody, in order to be wealthy, quickly, because you could follow the Dave Ramsey approach and, grow your wealth slow. You could save, you could buy a house here, save up a few years later, buy a house here. But really the only path to accelerating wealth is to figure out how to make an active income that makes you at least a couple $100,000 a year. And then from there, investing that active income into real estate, crypto, assets, all these things.
So, like, is there one that you'd recommend now for young people or really anyone in this economy?
For me, man, I look at all these YouTube videos and there's so many things I see people, pushing. People are like, oh, start trading Forex. People are like, be a day trader. Go buy GameStop. Be a crypto trader. For me, real estate's what made me my money, and it's made many of my students money. And it's just been the thing that's been around for freaking forever, since the beginning of time. Like, real estate will always be there. It always has been there. And if you're good at finding deals, you will make money. You don't have to buy them. You could wholesale them. You could flip them. You can keep them as rentals. Like, you'll never, there's no way real estate ever stops.
But are you worried about a potential real estate crash? I mean, Zillow was in the real estate flipping business for a little while. Zillow started buying homes, and then come 2021, they announced that, well, the real estate market isn't looking so hot. We can't make the profits that we wanted. So they started liquidating their homes and they shut down this entire business. They lost hundreds of millions of dollars. Aren't you worried about the real estate market?
We're going to jump back into the video in just a second. But before we do, I want to talk to you about our Market Insiders program, because if you're interested in investing your money in the stock market and the real estate market, our Market Insiders program can really help you with that. Market Insiders is not a class. It is a weekly group coaching session. Every week, you're going to get access to a live class where you'll learn something about how to invest your money in the stock market and the real estate market, and because these classes are live, you will be able to apply what you learned to the real world. So for example, let's assume that this week's coaching session is on the topic of how to read a cash flow statement. That means for the first half of the class, you might go over what is a cash flow statement, how to find a cash flow statement, what it means, and how to understand it. And for the second half of class, if Amazon released their earnings statement this week, you might actually go over Amazon's cash flow statement. That way you can apply what you learned, since all of these coaching sessions are live. The real estate coaching sessions work the exact same way. You're going to go over a lesson like how to understand the cash flows of a property or how to find an undervalued property, and then you're going to apply what you learned to today's market. As soon as you enroll in Market Insiders, not only are you going to get access to our stock market and our real estate coaching sessions, but you're also going to get access to our stock market beginners class for free that will walk you through everything you need to know to get started investing your money in the stock market. And you're also going to get access to all the previous coaching recordings, that way you can go back and learn more, and you're going to get access to our private community of serious investors. This is our exclusive Discord community that's made just for Market Insiders, and you can go into this community, network with other investors, and you can ask your questions. When I was working to create Market Insiders, there were two things that were very important to me. First, the coaches, because I wanted to make sure that the teachers were real investors, and second, the pricing, because I wanted to make sure that it was very affordable. First, talking about the teachers, all of our coaches have been vetted. These are not some random gurus that we found. These are real investors, people who have been investing their money for years. people who've gotten great returns, and people who have the money behind them. We're talking about hundreds of thousands, if not millions of dollars invested themselves. So these are real investors who are doing what they teach. And on the price side, it was very important to me that Market Insiders was an affordable program. I didn't want to create a program that would cost you $1,000 or $900 to get started with Market Insiders. I mean, it costs less than the price of dinner for two if you want to get started with Market Insiders. And you don't even got to take my word for it, because I know there's a lot of crappy products on the internet. You can try out Market Insiders for free. We have a free 10-day trial where you can go through the entire Market Insiders program, and then you can decide if it's right for you or not. During this free trial, you're going to get access to everything. You're going to get access to our group coaching sessions. You're going to get access to our free stock market class. You're going to get access to our previous recordings, and you're going to get access to our private community of investors. This way, you can try it out and then decide if it's worth the money or not. If you start Market Insiders, you try it, and then you realize that you hate it, well, then you can cancel your membership during your free trial, and it won't even cost you a penny. But if you start Market Insiders, you try it, and then you love it, well, then you can decide if it's worth it or not for you. This way, you literally have nothing to lose. So if you want to learn more and get started with your free 10-day trial to Market Insiders, I'll put the link to where you can get started and join with the free trial in the description below.
Aren't you worried about the real estate market?
Well, you know what's funny about Zillow and Open Door and these guys is they've made me a lot of money.
Really?
Yeah, because a lot of people were like, especially realtors, are saying, man, I don't like Zillow's buying these houses. They're going to kill our commissions. And, you know, flippers were thinking, oh, Open Door is going to start taking up all of our leads and all this stuff. But what we did was we still did our marketing. We still got deals, but we started selling to them. And so we've sold deals to Open Door, to Zillow. My students have done the same thing.
You know if Zillow's buying the home?
Yeah, like we'll buy the home and then we'll submit it to Zillow and say, hey, give us an offer. And so if they gave us a good offer we like, we'd sell it to them.
Would they give you good prices on your homes?
Well, okay, so this is why Zillow just had their downfall, because I actually did a YouTube video about this. I saw a Twitter feed about a guy talking about Zillow failed because of adverse selection. And so essentially what was happening with Zillow is they're going to be offering on anybody that submits for an offer, right? So say 100 people offer. Well, they're going to submit 100 offers.
They submit an offer to every home.
Right. Yep. So like, let's just say 100 people go on Zillow and say, give me an offer on my home. Okay. Out of those 100, right, there's maybe 20 of them that just say, dude, that offer's way too low. I ain't taking that. Say there's another 50 that, you know, say, yeah, that's pretty fair. Like, I'll take that, you know, and Zillow doesn't get hurt on those. But then there's another 20, 30 that Zillow like way overpays. And all those people are saying, yeah, let's get that offer, right? That's what we were doing, because we would submit to Zillow and, you know, 1 out of 3 times we're like, nah, we'll just flip it. They're not giving us enough. But the one time where it does make sense, because they're just way over, like they're literally paying for properties more than we would make flipping. Like really? That's what it was. Like
without flipping it, without
renovating it. Like we would look at it and we're like, okay, we're going to make 40 grand on this deal. Once we fix it up, we do everything. Zillow sends us the offer. We're like, we're about to make 50 grand with Zillow.
So if you bought a home for 200, for example, you might have to put in 30,000. That way you can sell it for 270, but that way you can make a 40 grand profit. But they're just coming right out the bat, giving you 250.
Yep.
So you can walk away with 50
without doing any of the work, getting your money quick. And so we had one, I don't remember if it was Zillow or Open Door, but we looked at the numbers. It was like a $500,000 house. And, you know, based on our numbers, we'd have made 10 grand. And so we would never buy that house normally. We're like, dude, we're not going to make 10 grand for a $500,000 house. But we submitted on Zillow or Open Door, whoever it was, and we just to see, like, man, before we give up on this deal, what would these guys pay? And it was over $100,000 profit.
What?
And I go to my team, I go, hey, you better make sure that they're going to buy this, because if we buy it and they don't, we're kind of screwed, because like you can't make 10 grand on a $500,000 house. You're going to lose money if anything wrong happens. And they go, yeah, no, they walked it. Like, they're good. We just need to buy it. So we bought it. We sold it to them. We made over 100 grand.
So you were looking at homes, and before you even bought the home, you were already submitting it to Zillow.
Yep.
To buy.
Yep.
And if they would offer you more than what you could buy it for in the open market.
Yep.
I don't think people heard that correctly, because you are blowing my mind right now.
Yeah.
You were looking at homes, you know, just you tell me what it is.
No, you're exactly right. Like, we would know what we could buy a house for by talking to either the owners or whatever, right?
And then we would
Was the home on the MLS or was this directly with the seller?
usually direct to seller.
Okay.
Because we spend a lot of money on marketing to go direct to seller. But long story short, there'd be these deals where we're like, yeah, there's not enough spread. It's not a good deal. But we would submit to them anyway, just on the off chance that maybe they misevaluated the home. And that happened many times. And to my point of why Zillow failed, that's the reason. Because the 20% that were lowball offers that they would have actually made money on, that normal flippers make money on, they never got them because people say no. Yeah, they paid what they should have paid on half the homes, but then there's this other 20% that they're gonna get killed on because, dude, you pay me over $100,000 what it's worth. There's no way you're making your money back.
How did they come up with their valuations? How were they doing that?
They were using an algorithm, and the algorithm just spits out what they think the property is worth. And like in the case of the one that we made $100,000 on that we shouldn't have, I think what happened, this is just my theory, is that it was in a golf course community, and there were some comps that were selling for $600,000 that were on the golf course. Mine was not. And I think the algorithm just sees, oh, there's comps at this square footage at 600, like we're good. But the algorithm can't tell what kind of views it has, what, is there a main street behind? Like, it can't compute these things that we know are really valuable. And so when they made us that offer, I was like, buy the house. Like, and like I said, my students have been doing this all year. We've been because like at the end of the day, why not? You have nothing to lose by just seeing what they offer you.
Yeah.
And when they offer you something stupid, you take it.
So, I mean, if you remember before the 2008 crash, flippers were the ones that got burned the most because flippers were buying homes, sometimes not even renovating it, just trying to sell it in a few months for a huge profit. And a lot of flippers were very over leveraged.
Yep.
And then when the downturn happened, they were the ones that were left holding the bag, and now they couldn't refinance, they couldn't sell, and they lost everything. How do you protect yourself against that?
This is something I've thought about for my whole career flipping. I think this is year 7 doing it. And we kind of mini experienced it last year during COVID, right? Like I was holding probably like 30 flips and, they shut down the world.
Yeah.
And I'm looking at it and I'm like, oh boy, what's about to happen here?
Yeah.
Like, am I going to be stuck holding the bag? Can I liquidate? Is this just temporary, right? And so for me, I tried to look at it as objectively as possible. And before the shutdown, the real estate market was on fire. It was crazy. And I looked at it and I said, you know what? I think this is temporary, man, because the market was so hot. We have inventory now because we're being forced into it. And then I just started to think logically, and I'm like, I think they're not going to like foreclose on people. I think they're going to do some things that, help people out. And it was the right bet. They did stimulus, they did forbearance, they did everything. And during that time, I just was like, you know what? I believe in this. A lot of my friends were liquidating and selling at losses just to protect themselves, especially my older friends, because for them, they had more to lose. They're like, hey, you know what? It ain't even worth it. Like, I'm not buying for the next, 4 months. I'm selling everything. And I looked at it and I said, well, this is a unique moment in time where I have no competition and people are scared. Like, what does Warren Buffett say? When people are scared, you get greedy. And so I did. I just started buying up more houses and I was getting better deals because everyone was scared. A house that I would have been happy to make 20 grand on, I was going to, the people bringing me the deals. I'm like, I got to make 50 on it just because I know you don't have another buyer.
Yeah.
And because I need protection in the event that I am wrong, because there was a chance I was wrong. But thankfully it ended up being right. All those deals made a lot of money. But I would just say, like, going forward, I'm just constantly always evaluating the economic landscape of like, okay, what are they doing with interest rates?
Yeah.
How's the inventory? What kind of stimulus are they doing? And I think when you look at the history of real estate and prices and everything else, it's like, dude, lowering interest rates pretty much always makes prices go up. It's like almost a certainty, and when there's no supply, then prices are going to go up, and there's no supply anywhere. And so you got to look at the two things of, do they plan to raise interest rates anytime soon? And is there this oncoming supply we don't know about? The reason it crashed in 2008 was because
the supply just flooded the market. Like they foreclosed everybody because everyone had these weird loans, and then all the supply hit, and that put us into a recession. Well, like I look at today, and I'm like, I don't see supply coming from anywhere. It's too expensive to build. The people who were in forbearance don't have to pay it back. Like they've got a loan modification. Like they're good. They're not getting foreclosed on. And all these people have equity. So like in the very worst case scenario, if they do need to sell or they get in a bind, they're not getting foreclosed on. They're just going to sell and make money.
Yeah. I mean, if you lose your job right now and you're like, oh my God, I can't make my mortgage, you're not going into foreclosure. You're going to sell and walk away with a profit.
Yeah. I don't know how many people are underwater, but it ain't many.
It's not like it was then. But what happens now, you talk about interest rates. The Fed says they want to raise interest rates in 2022. And home affordability is at its lowest levels on pretty much every chart that you look at. It's going to become more expensive to buy a home then.
Yeah. Yeah, and that's the interesting thing, man, because like at some point there has to be a ceiling to like what somebody's willing to pay with, how much they're making. And I think locally it's going to really determine, how you got to look like obviously nationwide what's happening with the government, like we just said, but you also got to look locally. And it's funny, man, because when COVID happened, everyone said Vegas is going to be the hardest hit. Vegas got crushed in 2008, the worst, and your whole economy is based on tourism and people aren't traveling and all this stuff, right? And that was part of the reason why everyone tried to run. And I go, I'm going to bet that it's not what you guys think it is. I'm going to take the minority mindset. And so it was right. But now when I look at Vegas, a year and a half later, man, what we have going on is crazy. We have all these people coming from Cali because they're just over it in Cali with just all the drama. They're moving here. They're buying up these properties that, to them is cheap. They're like, oh, $1 million? Like, dude, this is a great deal. Like, I live in a shack for $1 million. You're telling me I could get this on a golf course? Like, dude, sign me up. No appraisal needed. Like, I'll just buy it right now. I'm cool. You're seeing that. You're seeing all this new development coming, all these jobs, everything else. And I'm like, to me, I think Vegas is going to be one of the hottest markets for a while, just with everything it's got going. You got the no state income tax. You see all these YouTubers moving here for this very reason. Like it's, locally I look at it and I'm like, just having the data of my own flips and seeing how much more they've been selling for every single time. And then also looking at the luxury market as well. The luxury market in Vegas has just exploded. It's insane.
So tell me, you were talking about why people are leaving Cali. I know you've talked about this before. Talk to me about that, because I'm hearing that everywhere I go. I was in Austin, Texas. I was in Arizona. Now I'm in Vegas. And this is all in the last couple months. And each place I went, these are all near Cali. Every single one of those places said, so many people are moving here from California.
Yeah.
Why?
It's funny. I think those are the top three. I was actually in Austin. Yeah, that's where we met. We met in
Austin,
FinCon.
yeah.
Yep. And I know many people that have moved to Austin recently. And Austin ain't cheap, dude. I mean, Austin's
not cheap at all.
Expensive. Dallas and those places are much cheaper, but Austin's becoming the tech hub. That's why everyone's moving there. It's like, dude, should I be in Silicon Valley or should I be in Texas with no state income tax, where I still can go meet all these tech people and hire from the tech workforce, but it's just going to be significantly less. Like Elon Musk, great example of that.
He moved a big part of his manufacturing plant from Cali to Austin.
Yep. So I think tech is going to continue to do that, just because I don't know who would want to own a business in California, because with most tech companies, right, like you're tech. You don't need to be locally anywhere, right? Unless you need to be around like Apple and all these other things. But if you're starting a brand new tech company, there's no reason to ever be in Cali.
Because the taxes, the restrictions they put on you for your business. I mean, like that was part of what made Elon leave, is like during the pandemic, he wanted to get his workers back to work and they wouldn't let him. They're like, we're going to fine you every day. We're going to shut your factory down. We're going to do this. And Elon's like, dude, let us work. And so I think when you combine California's just very restrictive nature, plus the taxes, plus with the world going more remote and digital, like it's starting to lose its appeal as like the beach is nice and the weather's great, but man,
how much is it really worth?
Yeah, I mean, I love I've been to San Diego, I've been to LA. I definitely like SoCal. It's a beautiful place, and I haven't spent a lot of time in Vegas, but I'm here now. I've been to Arizona. It's not the same, but everywhere I go, everyone, they're like, don't start a business in Cali.
Yeah.
And it's just crazy to, you brought that up now, and it's like, man, like, what does that mean for California? Because I know a lot of people that watch this channel, are one of our biggest demographic is in California.
And I bet you they're all looking to leave. If you're looking to leave Cali, you're thinking about it. Comment below, because I bet you a big chunk of them are thinking about it. I'll just say, like, from my experience in Cali, I've, some of my employees live in Cali that work remote. And I have 8 properties in Big Bear, California right now, which I Airbnb. And I started buying those properties 4 years ago. And, at the time I was like, dude, I think Big Bear's undervalued. It's pretty cheap for California. It's pretty cheap for, a snow cabin town. Like, I think it's going to go up. And I was right. My first house I bought there, I paid $200,000 for it. Today it's worth about $450. Wow. 4 years later.
Wow.
And it's just, that market has gone bonkers. I bought one that I was going to keep. I bought it for $300,000. We were doing a garage conversion, making it square footage. And, the city just popped us for all these permits and all this crap. And it took 2 years to get it complete.
Holy cow.
Just now finished it 2 years later, right? And in any normal world, you would lose money. Like, taking that long to renovate a place.
Yeah, I mean, you're not getting any rent. You're paying money for taxes and all your expenses with no money coming in.
Yeah, and I got loans on it and everything. Like, I was bleeding money on that house. But guess what? 2 years later, by the time it got done, I looked at the prices and I go, let's just sell it. I listed it for $700,000.
Wow, and you bought it for what?
$300,000.
Holy moly.
Yeah, and I mean, I don't know how much we ended up putting into it after all this, maybe like $60,000. But like... Wow. At the time when I bought it, I thought it was worth, probably $450 when it was all fixed up, and it's crazy. But long story short, I've had these rentals for a long time. They were doing great, making great cash flow. Also being a great resource for the city. I'm bringing in tourism. We're paying our taxes. Like, it's great for everybody. But when you're Cali, you don't like great things, apparently. And so what they did was they started restricting Airbnbs. They said, hey,
really?
You can only own, I think it was like one or something. Like, even though I was already grandfathered in, they're like, yeah, from now on, people can only have one Airbnb. And we're going to make just all the rules harder. We're going to make check-ins harder. We're going to make the taxes higher. We're going to restrict how many you can own. We're going to make just everything about running an Airbnb business way harder. And it was the first time where I'm just like, man, is it even worth all this headache to deal with these guys? Like, and if this is just the last couple of years, where's this going?
Yeah.
Do I want to keep owning real estate here? Because it's such a pain.
So what's going to happen to housing prices in Cali?
That's the thing, man. A lot of people were thinking, oh, well, then Cali prices are going to go down. But I mean, I think what happens is you get just different people migrating there from China, from these other things that,
really?
They're like, oh man, like, I got to get out of China. This place sucks. Like, there's always somebody, people from Cali are like, I got to get out of Cali and go to Vegas. People from China are like, I got to get out of China and go to Cali. So
it's like a funnel. People still going to Cali, but people that are in Cali are leaving.
You're getting a lot of foreigners who are going to Cali.
Interesting.
But you're not getting anybody move from Wyoming to Cali. Nobody's migrating to Cali
from the States.
Yeah.
So if you're a business owner, then you're saying stay out of Cali, look into some of these other places where everyone else is moving to, because there's a lot of people moving, demand is coming, and if you want to flip things like houses, there's a lot of opportunity here still.
Yeah, for sure. A ton here still. And the other thing too with Cali, part of that story was the permits. Dude, getting permits and anything done with the city is just such a headache, man, compared to other states.
I've dealt with that before. I made a video on my worst real estate deal ever. This is a property that I bought in the city of Detroit, and they were permitting me or finding me for everything. And what happened was, this is like after the 2008 crash.
Mm-hmm.
So like the city went bankrupt, and like they did not have inspectors, and an inspector would come out and they would say, your electrical riser needs to be 13 feet. Like, okay, so then we would make it 13 feet, and they'd fine us for whatever reason. We make it 13 feet. The next inspector would come and say, why is it 13 feet? It needs to be 10 feet. Like the last guy said 13. And so now we had to change it again. And then they would permit us for everything. I mean, they made us pay $100 permit fee to add smoke detectors. They made us pay $100 permit fee to pay for windowsills. They made us, permit fees for everything. If you want to paint the kitchen, we had to pay a permit fee. It made no sense.
Like what is the permit needed? Like we're painting.
Exactly. And so, I mean, I think that's a good point where, especially if you want to be in a business like a side hustle or flipping real estate, like you have to kind of look at the jurisdiction that you're in.
Yeah.
Because different cities are going to have different rules.
Well, with entrepreneurs, right? You want freedom, right? That's why we become entrepreneurs. We don't want to be told what to do.
Right.
And so when Cali wants to tell you how they want things, it makes it tough. And funny story. So, with an Airbnb permit, every year they got to re-inspect the place, right? So I already had my permits. I've been paying taxes. Well, they go to inspect it on one of my properties, and they're like, hey, this isn't, you can't do this anymore, because I had a house and a guest house. And they're like, the guest house was never permitted. And I go, I bought it like this. This is a cabin. Some of these houses were built with nothing. They're built by people's hands, with no city. And they're like, yeah, but you can't do it. I go, I've been paying taxes on this for 2-3 years. How are you going to tell me I can't continue to rent this? And well, you can't. So they
shut your business down essentially.
They shut down that piece of the property, and that little guest house was making me $50,000 a year.
What?
So I have not been able to rent that. Another time on one of the other properties was, we were renting it, we're doing the thing, and then all of a sudden, we get the inspector in. They just were making the inspections way more stringent, right? But we end up doing it. They have to come out 3 times because, they come out the first time, they say, hey, fix these things. They come out again, and we fix them all, and they said, oh, well, we missed these 2 things. I'm like, dude.
I've heard that so many times.
Dude, and so then they come out the 3rd time finally, right? And we fix them all. He goes, okay, great, I'm going to sign off. Signs off, right? Well, months later, we get a call or a letter from Big Bear, and they're like, hey, you're renting this without a permit. What are you talking about? They're like, you never passed final inspection. And we're like, dude, we've passed it. The guy came out 3 times, whatever. Like, well, we don't have record of it in the system. And I go,
oh my God.
Well, what do you want me to do about it? He came. Here's the text messages. Here's, whatever. And they go, well, you're going to have to appeal the fine. And I go, I'm not paying the fine. What are you talking about? And they're like, well, you can't appeal unless you pay it. And the fine was $8,000.
Holy cow.
Yeah. And so I had to pay the fine to appeal the fine, which I ended up winning. And during the appeal, they said, hey, yeah, we've been having some issues with them not documenting the final inspections.
Did you get the $8,000 back?
I got $6,500 back because they pinged me for
the fees,
something else. I was just like, dude, I'm so over this.
So now you're in Vegas. You said there's no state income tax here.
Yeah.
What does that mean for property taxes? Because if I want to own property, a lot of I've heard that your property taxes are higher if you don't have a state income tax.
So in Texas, that is true. That's one of the negative parts of Texas. Their property taxes are ridiculous. Mm-hmm. In Vegas, our property taxes are minuscule.
Really?
Yeah, I would say on a $500,000 house, you might have property taxes of $2,500, $3,000 a year.
What?
Yeah, dude, they're cheap.
Wow. So and what would that rent for? I mean, so if let's say I bought a home, what is a good rental price for a home here in Vegas?
In Vegas, I've always told people the rental rates aren't great compared to the Midwest and all those things, but they're better than Cali.
I see.
But I mean, it just depends, man. It depends also how good of a deal you get. But a house that is truly worth, say, $400,000, that's our median price right around. I mean, I see them getting $2,500 in rent. So pretty much it's close to what your mortgage is.
Interesting. So what would the return be? Are you making any money off of that on a rental?
So for me, the rentals I do keep here, I mean, you got to remember I'm getting them already undervalued. So right. We've got already the equity built in, and I'm able to refinance and get all my money out. And, they make a couple $100, nothing crazy. But for me, my rental portfolio is really just, as far as my own, I own them 100%. It's really about the long term. Yeah, it may not cash flow great today. I might only make $100, $200, but with the way rental rates are 5 years from now, that thing is going to rent for a lot.
See, that always scares me because I was looking at some properties when I was in Austin.
Yeah.
And they were listing these apartment complexes at a 1 cap or 1.5 cap.
That's crazy.
And I was like, wait, so what that means is it's $1 million property. It's going to profit $10,000 to $15,000. And I was like, that makes no sense. And they were like, well, you got to look at the future rent growth.
Yeah.
Like 10 to 15 or 10% rent growth a year. And in 3 years, you're going to be making, so much more money. So you got to not look at it based off of today's prices. You got to look at it in 3 years prices. That scares me.
Yeah.
And
and I'm not telling anybody that they should take my strategy, because my strategy is based on, I've got other businesses making me money. So if I'm not cash flowing or I'm negative for what, like, it's not a big deal.
Yeah.
So like, it makes more sense for me to get good long-term assets that I can just wait out, because you will win waiting out if you can.
Yeah, I mean, over the long term, I mean, eventually rents will go up. I mean, that's the inevitable part of life.
Yeah, I mean, I look at the properties I bought, a couple of years ago in Vegas, and it was the same deal. Like, it'd be like, man, this doesn't really make sense today. But like, one of them I bought, and I paid $260,000, and whatever my mortgage was like $1,500 or something, and the rent on it was like $1,900, and once you factor in your property manager, you're like breaking even. And
really?
when you have one repair, you're down. And that same house now today, a little over 2 years later, could easily get $2,500 to $3,000. So now we're talking about making some major money.
Yeah, so it's very different than the Midwest. In Michigan, like, I can go out. If I'm talking about single family homes, I can buy a home right now. We'll just assume round numbers, $150,000.
Right.
I can buy it, and this is going to rent for $1,500 a month.
Yeah, 1% rule. It's great.
And I'm going to make half of that. I mean, assuming I got no debt on it, because a lot of these homes I can buy just cash. I mean, I can just $750, $800 a month going in my pocket.
Yeah.
And it's you're not going to see the same appreciation in rent that maybe you'll see the doubling, but it will steadily go up. But it's like the cash flows are very different. It's very stable.
Yep.
They're consistent, and you know exactly what you're getting as soon as you buy. So it's, you can see the different markets in different parts of the world, in the country.
Yeah, I tell people this all the time. In your rental portfolio, you're going to pick one of two ways. You're going to either go for appreciation or you're going for cash flow, because very few markets have both, right? It's like you said, with the Midwest, cash flow is great, but it's not going to really grow too much. But in Cali, even take Cali for instance, right? Like, a house in Cali 5 years ago, oh my gosh, like, you killed it selling it today.
Yeah.
Vegas, very similar, man. I mean, houses have doubled in the last 5 years in Vegas.
Yeah.
Like, it's crazy.
See, that appreciation is too risky for me. I like the cash flow because I can predict it. I know how much money I got to invest today. I know how much money I'm making every month. Yeah. And I don't got to worry about what's going to happen. If property values go down, oh well.
What I'll say is, I think it's good once you reach a certain level to just have, a diverse portfolio of houses. So it's like, for us, that 334 unit I mentioned, that's a cash flow market, right? Like, we're going to be all into those units for, just call it, $65,000 to $70,000 a unit, and they're going to rent for $700, like,
each unit.
Yeah, and that's great. That's cash flow. That's awesome. Cash flow at scale too. But I would never see a deal like that in Vegas. It just doesn't exist. So you just kind of got to pick, like, what's most important to you. And, like, even for a guy like you got all these cash flowing assets. You could definitely take a risk and go buy one, appreciation market play, and just, like, you're like, hey man, I'm kind of sketchy about this, but at least my cash flow.
I like my cash flow. How much is that property paying you in cash flow a month or a year?
Which one?
The 300 unit one.
So we just bought that like last month. So right now we're still stabilizing it. It's not making any money for us at the moment.
Is it fully occupied?
I don't know the exact number right now, but I want to say it's like 70 or 80%.
Okay, so there's room for
There's upside. A lot of room for upside there, and there's room to, because even though it is occupied, there's a lot of people not paying, right? They didn't let people get evicted. They didn't. And so a lot of these apartment owners who had tenants who kind of took advantage of that kind of got caught in a bind.
Yeah.
And so we were able to buy it because of that. So we're still in the stabilization process. I know that with real estate funds, like buying bigger deals, there's usually two plays. There's like, hey, I'm buying an A class, B class asset, already stabilized, and I'm going to make cash flow from day one. That's great, but you're not going to really be able to add value to it. For us, obviously, it's like a house flip. We know, there's some work to do here, but once we get the work done, we do the renovations, we get the right tenants, we get rents up, it's going to cash flow a lot at that point.
So what were you looking at? Like, were you looking at businesses, population? What made you want to buy this particular property in this area? Because, I mean, Georgia's kind of far from Vegas.
Yeah, so for me, when I looked at the fund, I realized that with my social media following and all my connections across the country, because I'm part of a lot of masterminds too, that I could get a lot of deals in other places. And at the end of the day, when you're buying a unit that big, 300 plus units, it doesn't really matter where you're at because you're going to have everything in-house. You're going to have, your property management, your maintenance people, like all that stuff. And so we've just always said, hey, we're open to deals anywhere. Like, send us the deal. And if there's a big enough spread, then we'll look at those other things you mentioned. We're going to look at, what we think it's going to do in the future. We're going to look at the population, all that stuff, right? I mean, people are moving south. Like, people are consistently migrating south.
Yeah.
And so Georgia is a very hot market for apartments for that reason. And I'll just say, like, here in Vegas, there's just really not that many apartments compared to Georgia and other places. So we knew we were going to have to be, in other places that had a lot of apartments. Like right now, I know we're looking at a deal in Iowa, right? Like, it's not like I care to be in Iowa. Like, it's just like, hey, if the deal makes sense and it's worth our time and there's enough meat on the bone, then let's do it.
Wow. So are you like going up there often to look at them, or do you do all the analysis from your office?
We do all the analysis here. We underwrite it and make offers from here. And then, if an offer sticks, then we go evaluate it, go in person.
Interesting. What are some of the biggest factors you look at? Like the biggest 2 or 3 factors you look at was going to be a yes or a no on the deal?
I mean, for us, our model is that we want to refinance all of our investors out within a few years. Like, if we already buy something that's stabilized and we pay close to market value, it's impossible. Like what those funds have to do is bank on appreciation to get their money. They're going to make a little bit of cash flow for the next 5 years, but their whole goal is, hey, 5-7 years from now, we're going to exit because of appreciation and we're going to make, a good chunk then. They have to exit because there's not enough equity in the deal. But if we go into a deal just like we do with house flips, already like buying it at a big discount because there's obviously something wrong with it.
Yeah.
Nobody's just selling a friggin' perfect asset for, 70% of value. So we go into it knowing there's something wrong. We know we can fix it. We know we could stabilize it. And at that point, we just run the pro forma and we just say, hey, okay, right now, we're buying this for $10 million, but with these rents and with these changes, we can easily justify a value of, whatever, $16 million. And at that point, if we know we can get a $16 million value on the appraisal, let's refinance, get everyone's money out, then we can hold this thing.
So why do you refi instead of selling it?
Because like you, we want to have cash flow. We want to build a long-term portfolio, but also with real estate, as you know, you get so many benefits, man. Like all the depreciation, all of the appreciation, all of the write-offs and just like the cash flow. Nothing can offer those things the way real estate does. Like, stocks, they appreciate, they can make you money.
Yeah.
They can have dividends. Crypto, like you mentioned on, I think my podcast, stable coins, they can pay you cash flow.
Yeah.
But none of those give you tax benefits like real estate.
Yeah, 100%, man. And it's crazy. So now you're buying these multi-unit apartment complexes, 100+ units, started by flipping couches.
Yeah.
Out of a need, turned that into a home flipping business, turned the home flipping business into a much bigger home flipping business, which created more side hustle opportunities, more business opportunities. Then you started creating content, which brought more opportunities, using that to leverage even bigger deals.
Yeah.
So it all started just with one side hustle that you found and just kept scaling that bigger and bigger and bigger.
Just taking one risk, man.
Well, congratulations on all of your success. Where can people learn more about you and any last remarks you have for our viewers?
Yeah, I would say if you want to learn more about me, easiest way is just to go to ryanpineda.com. You can see all the businesses. My social medias are all on there. Go follow me if you want some content on how to make money. But I guess the last remark would be kind of just what you said of like, man, it all started with just one thing. I didn't think I'd own all these businesses or be making content and talking to you and like being a YouTuber. Like that never was a goal, nor was it a thing. But, you know, by taking one risk, you know, it succeeded. And then it led to a new opportunity where I still had to take a risk. And you're just constantly taking a new risk and new action. Like, you know, when I made my first YouTube video, I didn't know if YouTube was going to work. Like, I'm just like, hey,
none of us do.
No, I'm like, I'm going to make videos and I hope it works. But, you know, maybe I'm not taking a big monetary risk, but I'm taking a very big time risk to go put out this content. And, you know, it worked and it's led to so many opportunities. So I would just say to anybody listening or watching that, dude, just take the risk and, you know, you never know what it's going to lead to.
I love it, man. Well, thank you so much, Ryan. Thank you for coming on. And I'll link everything that you just talked about in the description. Thank you, man. I appreciate it.
Appreciate you, bro.
They're going to buy Bitcoin. They're going to sell all their altcoins and all their other random things because those things are risky and competitive and insecure and regulated. And Bitcoin is the least risky, hardest to regulate, hardest to tax, hardest to break, most universally desirable thing in the universe. There's nothing that's more robust that you can get your hands on.